We've also got Probal Sen joining in. And Probal, reorganization of their capital structure. This is going to consolidate all of the digital assets in one entity, reduce the overall debt as well, and streamline the structure. Do you think that this, in the long haul, makes it attractive for eventual monetization, enhances overall shareholder value?
Absolutely. I think one of the things that has been mentioned and in terms of communication from the company as well is that if globally, if you really look at it, digital platform companies have little to no debt on their books more often than not. And I think the attempt really is to create a similar company and pretty much position the digital services business of Reliance as much more than just being a telco. And I think that's probably the broad message that one should take from this reorganization. As you would have seen, at the group level, at the consolidated level, obviously the debt doesn't change much. But what it does is actually free up debt from the main digital services entity by the creation of this new wholly owned subsidiary, which will have negligible debt on the books, and therefore is much better positioned as an opportunity for any strategic investor to come in, or even for the eventual listing. Because if you really look at it with a cleaner balance sheet, the new entity will obviously be in a much better position to essentially create value. And now that the capex cycle for the connectivity business is winding down gradually, not to say that it has disappeared, but the capex requirements for at least the telecom infrastructure and broad connectivity that is there, they have already done a bulk of that. So therefore, capex requirements themselves are much lower than what they would have been 3 years ago. So this is a good time to sort of create this entity so that you can actually unlock value and create an attractive opportunity for a potential strategic investor to come in.
The fireworks and Reliance on the Murat Day were missing. Tata Motors reacted to numbers, ICICI Bank reacted to numbers, but this news came on the Dhanteras Day, which is Friday. Markets opened for a brief session on Sunday, but the market reaction was very muted.
Yeah, well, I think at the end of the day, the company, people will have to really see in terms of what kind of benchmark value does the strategic investor come in at. If you look at it, that the company has talked about a fair value at which this new, optionally convertible preference shares will be created in terms of how they will invest in this new wholly owned subsidiary. But our sense really is that, at least in terms of the way we look at it, we already value just the connectivity part of this business at about 3.6 trillion or so. But our sense really is, based on our interactions, that the fair value at which these preference shares are being created, which essentially serve as a marker for value of the digital business, will probably be much ahead of that, closer to maybe, somewhere around 4 lakh crore plus. And therefore, that premium, I think, will take time to be realized as people get more clarity on what kind of strategic investors are talking to Reliance and what benchmark that they are giving to this digital business. Because today, if you really look at it, a bulk of the business is anyways coming from the connectivity part, which is well known and which numbers are already there on the street. So one can argue about whether people are fairly valuing it or not, but that's a matter of, the market. But once this premium is established, our sense is that, there's a further round of re-rating that will definitely happen in the stock.
All right. Thanks for that, Probal. Thanks for that quick view on Reliance.